Okay, guys, today we are with Elijah with Cost Plus Construction, and we are going to go over something that I don't think has gotten enough attention. And we're going to try to do this once a month to where everybody can learn and grow their investment business, not only with a great lender, but with a great turnkey company called Cost Plus Construction. Elijah, tell us a little bit about what we're talking about here.
Well, many have probably already known Brant Phillips in the industry. He's been killing it for over a decade, probably two, in the industry, both with real estate and being a realtor, broker, working on investments himself, hundreds of them, both in the single family space and mobile home park space. And he and I had known each other for a long time and had been doing construction together. If I got a little too busy in the past, I recommended people to him and vice versa. And so I have the privilege over the last year to be able to work with him as a sales manager at Cost Plus, where we are really working through the same things that matter most to all investors, and that's keeping budget in mind, keeping timelines in mind, and good quality products, materials, and work. And Cost Plus is great because it's very vulnerable in its pricing, transparent, and we really are set up in such a way that we get to earn your business every week. So if you have something going on in your particular project, and you've realized that sometimes maybe contractors in the past, or you've heard horror stories of contractors that didn't necessarily line up with what they said they would do, or the attention to detail that you believed was important for the job. We focus heavily on that. That's our three core values: is focusing on the budget, focusing on the quality, and the timelines. So Brant's been doing it for a long time, and I'm happy to be a part of it. We keep that mindset as we walk the house. So when I walk the property, I'm going all detailed lists. So it's not something that's unknown what we're talking about. Between us, we have a clear agreement of what's happening room by room, or space by space, or item by item. And that's always been a clear benefit to an investor, because then they can see it on a spreadsheet style format. They know exactly what's going to be happening, and we can hit timelines accordingly.
Yes, yes. So the benefit that most people don't realize, and they haven't realized yet, is that we had this no draw loan with you before, and I don't think we did it enough justice. I don't think we got the word out enough. I don't think that we talked about it enough. And that's what I want to try to grow
Yeah.
our relationship as far as this no draw, because it's a smooth process. I think we've done one so far. From what I understand from the client, it went great. Maybe we can get them to actually do a testimonial on one of these once a month that we do. That way, the general population is getting to know about how easy it is and how turnkey. Because, I mean, at the end of the day, the biggest problems that I have seen over the last eight and a half, almost 9 years, is the fact that people have problems with contractors. I mean, it's just a fact. They don't show up on time. Their kids are sick. They've got so many aunts, uncles, cousins that pass away. I mean, it's like, and I use that as a funny example, but it's true. They come up with every excuse. If it's a beautiful day outside and it's a Friday, they'll come up with every excuse not to go to the job, because they're going to do something with the family because they've already gotten paid. So at the end of the day, I get it, but at the same time, it also, you got to manage your contractors kind of like you manage. I hate to say your kids, but you kind of have to. You got to stay on top of them, make sure that they're doing the right things, make sure they're at the project when they say they are. That way you can meet your timelines. But the advantage of a no draw loan, and I'll let you talk about this a little bit more, is that we kind of take the rocks out of it.
Yeah, that's a good analogy. So yeah, there's sometimes extra weight when more things are involved, and when you can eliminate and kind of clear the path for something to go smoothly, that is huge in the industry. Now, those checks and balances of the some of those weight things are necessary, but when you have strong, trusted relationships, it does allow that to go easier. And I feel like that's really what we've done is we've cleared the pathway, jet lending and cost plus construction, for a lot of the determinations of qualification of work, timelines, being able to get things done. That's been able to happen on a higher level, and that helps the investor because then they know that they're not only are they dealing with a trusted contractor, but they're also dealing with less issues on timelines for payment. One thing to note: so cost plus construction, as opposed to even some other ways that people have worked or even I've worked in the past, is a very low uh, deposit, and then everything is work completed, and after it's been invoiced, then it gets paid out. So it really keeps everybody connected more. Sort of nobody's too far ahead of anyone else, and that helps the project's integrity. It helps the feeling and comfort level of any investor or any client to be able to know that things are staying connected really well. That low deposit just stays till the end, and that's how it works with you. With the no draw loan, is that jet lending and us, we've made an agreement where some of that is actually embedded into the initial agreement they have with you. Whatever's in the escrow, whatever's in the construction, is able to be utilized for that. So it works really well. A lot of weight, if you're talking about weights, a lot of weight off their shoulders.
Yes.
A lot of weight off the investor's shoulders, a lot of peace of mind that could come to that scenario. Yeah, I mean, scenarios happen, things happen on jobs. There, construction is hard. I think I've even heard Eddie talk about it from the stage. It's like it's one of the most difficult things. But if you can have someone else cover the headache or the majority of the headache away from you, then you can keep all the rest. That's good about construction. You're taking something that needs help and you're making it beautiful. You're taking something that isn't as valuable in its current state and making it more valuable than what you're paying to make it so. There's a fun element to construction that you get to keep all the fun when you're dealing with a turnkey contractor, and then they're able to take the headache for you. You can scale your business more than you could if you were doing it on your own. You could do more jobs at a time. You can not have to worry if you had three projects come across your desk. I know jet lending, you guys can handle 3 projects at a time. We can handle more. So it's just a matter of being able to see where you want to be in your business. And it helps you if you can start setting goals beyond your own limitations. Sky could be the limit on stuff like that. And so I'm happy to be a part of that. I'm happy that you guys saw the value in that as well. And we really appreciate the partnership.
Yes, absolutely. I mean, at the end of the day, we want more people to know about it because it helps us close loans and it helps you grow your business as well. And just to kind of go over what a no draw loan is, which most people are like, well, what's a no draw loan? What is it? And I'll touch on it a little bit, and then maybe you can kind of touch on it as well. So a no draw loan, for the people that are watching this, is usually when we close a loan, we require you to go and do at least 30 to 40% of the project, not counting demolition, completed work to where you go in and add value to the property. Because remember, as a hard money lender, we're lending on a future value. So at closing, we want you to add value before we can, I call it an insurance policy, but the repair draws that we hold in escrow is kind of our insurance to know that you're going to, rehab the property. And then we're going to hold that kind of as insurance. So when you do add value to the property, we have those monies to reimburse you. As Cost Plus comes in and gives you a turnkey option, and a better option, in my opinion, for a lot of investors that are just starting out, or even seasoned investors that just don't want to
grow.
They want to grow and be able to multiply this process. What we do is we advance some of the costs to you, to Cost Plus directly. Now, that doesn't mean that you should be totally hands off of your project. You've got to make sure that you're verifying repairs are done, and make sure that you're walking the property and making sure that you still handle your business like a business, and making sure that cost plus isn't running crazy on you. But at the end of the day, with the reputation that you have and the reputation that cost plus has in jet lending, we trust you enough to be able to say, okay, here's money, go get started. And it's literally it takes the rocks out of lending, and it takes the rocks out of the investor, because at the end of the day, you're not having to come out of pocket at closing another $15,000, $20,000, $30,000 to get the project started.
Right. And I'll add, that initial amount is more like a deposit, since we're waiting to charge the accounts based upon invoicing that comes in. Then we've really, I believe, kind of opened up the proper way to be able to handle these jobs, when invoicing comes in is when you as the client pay it. And so that normally, outside of the no draw loan, normally what would happen is that deposit would get refunded after that final invoice, maybe a week or two after the job's done. But the benefit that your investors have that go through jet lending on the no draw loan is they don't have to come up with that extra cash that's typically necessary if you're working direct, or if you're working with reputable construction companies, because both require either payments right away, or they require something up front to be able to get the job going. It's as much as we want to be able to always protect ourselves. If you do it too often, you can sometimes limit the amount of people you can work with. Well, in this case, we can do a bit of both, right? We can keep the integrity of not having a high amount. You can keep the relationship that you have with jet lending. You keep the relationship with a reputable contractor, and you can move forward without the delays. You can move forward without having to have the extra cash in the bank, because, like you said, typically they would have to not only have the escrow in your account, but they'd also have to have the capital to be able to put down as any sort of down payment, or along the way till they get about 30% done. That's eliminated in this program. That's what's amazing about it, is that a lot of your reserves are able to be kept toward new projects if you want to.
Projects, yes.
Right. So now you can grow quite a bit better strictly by using you and the project and the program that you're talking about. So I think it is understated. I think we haven't done a good job of doing it service, because that's 2 projects compared to one, just simply by eliminating the extra cash that's necessary to keep that project going from the beginning. And that normally would be there for the entire project. You don't get that paid back till the end normally. So now you'd have to wait sometimes, if your reserves are at that certain level. You'd have to wait until the end of a project before you could start another, but that's not the case right now. And if there's a lot of deals coming across your desk, you're going to want to do a couple in tandem at a time or more, if you can.
Yeah, if you have the cash to do it. And there's a lot of investors that do have the cash to do it. Let's say they've got $100,000 in the bank, but as soon as they close that first deal, okay, so they had to bring a little bit of money to the table. And then after that, now they got to take $20,000, $30,000 and go buy materials and pay their GC. So now, they got $50,000.
Right.
That's maybe not enough in case emergencies happen to where they can start that next project.
Right.
Now,
right.
With cost plus, you get to keep all that $100,000, and all you got to do is just make your payments on time. That's it. Because we're going to advance what we're holding in escrow to you to ensure that the project gets started. And
how exciting is that? It can actually be a real no out-of-pocket deal.
It can
be. It can be. If the deal is in the right numbers, it absolutely can be.
It can be an absolute zero out of pocket, zero after closing, and you get to hold all your cash.
Right.
And at the end of the day, more people should be like, you know what? That's worth me giving it a shot. That's worth the fact that I can do 3, 4, 5 deals at a time, because I've got plenty of cash. And if I use jet lending with the no draw loan with cost plus, then I am literally 0, 0, 0 out of pocket the whole deal. Only thing I got to do is pay my interest and make sure I close on time within the year.
Absolutely right. And then let's say that there's a person out there that says, okay, but I don't have 2 or 3 deals right now. I only have the one. But what about next week? And your job's already started, and you pick maybe not you going with jet lending, then you might miss out on the opportunity there if you didn't have those extra reserves. So I'm with you, man. It's a great opportunity. I'm so glad we were able to click with it, and I do believe it is going to just keep growing. And so yeah, keep the word out there. Worst case is that some folks say, yeah, I still like using jet lending. I don't necessarily need that program or whatever. But I believe that when it's available, use it. When it's
Yeah.
there for you, use it. It's there right now, and you guys do a really good job. I hear all the time that you do a really good job turning around your quick estimates on where you might be able to be. So that's another shout out to you. And if anybody's interested, because and I've heard Eddie talk about this on stage, like you can miss a construction number, and that's hard. But like if you're quick estimating, but if you miss the after repaired value, that's really detrimental, because
It is.
5 or 10K on a repair budget miss is one thing, but 30, 35, 40K on a after repaired value can really kill you. So, and you guys know these areas. You've done loans, thousands of loans in these areas, and you know it. And so just even working with you in a trusted capacity to help with that, that's fantastic. And as long as as people are serious about considering the relationship, I think you guys offer that, don't you? To just say, hey, this is what we think maybe in that area.
We do. Um, you know, I have personally evaluated. I don't know. Probably in 8 years. Let's just take an average of 200 a month times 12 times 8. Probably about 19,000 deals. Personally,
there you go.
19,000 loans.
Did everybody hear that? 19,000
in 8 years, and I'm averaging about 200 a month that I evaluate. Okay,
talk about something that probably goes understated, Rob. Right there, that's that fact.
I have literally evaluated 19,000 properties in over 8 years. Personally, myself looked at and evaluated. So at the end of the day, when anybody comes to me that's done one deal and tells me, well, your ARV is wrong. Now, that's coming from me with 8 years. When Eddie looks at it, he's got 20 years on me, alone in this.
Yeah.
So at the end of the day, it kind of makes me laugh, because people are like, well, you don't know what you're talking about. Well, I think I kind of do. I think I got the credentials.
Yeah.
And I'm not trying to be a smart ass with nobody. I'm just like, look, I can appreciate that you think that the values are there. Most people right now don't realize that how many actives are out there. They don't pay attention to actives versus pendings. And I know we're getting a little bit off topic, but we're talking about ARVs and missing ARVs. When you have a lot of actives, very few pendings, and not a lot of solds, you're competing in the active market with a ton of other inventory.
You're right.
So in that inventory, this is where cost plus comes in. You got to look at the rehabs that are done and why they're not moving at that price.
Yeah, just become a little bit better, edge out the competition just a little, and you'll be the one of the first ones sold typically. Whenever I walk a property, I don't know honestly how much time exactly we have, but
we have an hour. We have an hour.
Okay, so let me go through something for folks, and this is something that they'll appreciate no matter what. It's a timeless thought process, because when we go into a house, when I go into a house, when you as an investor go into a house, when you're looking at pics of a house, Rob, there's always an idea that we need to know what needs to be done on the property to get it to the comps, right?
Yes.
Well, I want to start instead with another thought, and then we'll move into that. So the first thought I like to start with is, let's first establish what I can keep. Let's first establish what I can keep in the house, because I'm not doing everything. It's a remodel. It's not a brand new build, right? So I am going to keep something. So let's establish what can be kept, what maybe can be kept, what probably shouldn't be kept, but if I had to, I could. Like that sort of list is just, it's a great thing to do, because then everything else really needs to be on the table for the construction proposal. Once you get into it, now I want us to think about 4 different things. And this is the buyer, right? This is a buyer who, based on your after repaired value that you've helped them establish, They know that they're coming to the house to buy. They're going to put in an offer. This is that kind of buyer. They love the neighborhood. They like the price. They like your picks. If they show up, there are things that they're not going to like about the property. It doesn't mean they're going to not buy the property. So I like to separate it into 4 different categories so that we don't over rehab a project. The 4 categories are this. Number 1, the person who came to buy, liked the picks, liked the neighborhood, liked the price, they're not even going to walk in the house. Okay, now that's something you got to fix. This is something maybe the garage is leaning. I've seen that happen. Maybe a ton of landscaping is just surrounded around the door. You can't even see the front door. It's real ratty looking. Depending on the price point, curb appeal may be a bigger determining factor on something. So they won't even walk in the house. You got to fix that. Okay. Number 2 thing that the buyer would hate. This is something that they'll walk in the house, but they won't put an offer in. Now, granted, they came to buy the house. They wanted this house. This is who you wanted to be able to appeal to. Why wouldn't they put an offer in? Okay, that's things like bad odors in the home, bad workmanship, a mixed-matched type of hardware or decor. Maybe you've got a lot of like busy tile work in one area and right next to an area that's cleaner tile work, right? Like those kinds of things can sometimes mess with people's heads. So they don't put an offer in. All right. Category 3, again, this is stuff they hate. Category 3, they're going to put an offer in, but their offer is simply just going to reflect what they see. Okay. Or they're going to wait until the inspection report comes back and they may negotiate with you on some of those concessions, right? It's category 3. That's things like AC, electric, some rough electrical, maybe some stuff in the attic, might be roof, right? It's things of that nature, typically. Category 4. This is a list of things that the buyer hates, but they never talk to you, the seller, about it. They never talk to you about it. They hate it, but they don't talk to you about it. That's things like cracks in the driveway, maybe, that the house doesn't have brand new windows, that the back landscaping isn't perfect. It could be that the age of the AC unit is 7 years old and it's functioning, so they know they can't ask for it, but they don't like that it's 7 years old. This is where a realtor may not always be the best to listen to on category 4, because the realtor hears an earful about it. The spouse hears an earful about it, but the seller never hears about it. It's the thing that doesn't determine if they're going to buy the house or not. It doesn't move the needle on the price. It's a simple thing that you'll see a lot. When you sell the property and you go by months later, the landscaping's done, the driveway's done, the windows are done. It's not something that you had to do necessarily, depending on the price point, to get the job done for the area. And a category 4, rarely ever, from what I've seen, rarely ever, and I've done over 2,000 remodels for investors, and so I've seen quite a few houses. But over on category 4s rarely become a category 2. It rarely is a deal killer. At most, it's just a negotiation. It becomes a category 3. So it's just good to note that there are things out there that you could accidentally over rehab because you know the buyer's not going to like it. And even though you're not wrong, it doesn't mean that you're right to do it all the time. I occasionally will say a roof may need to be done. Might be half-life, right? Might need to be done. But I'll say, hey, look, they're not looking directly at the roof when they're putting in their offer with you. It's just going to maybe come up on the inspection report. But if you happen to do a lot of really great stuff inside, they may not want to miss out on the opportunity to buy it. And so they may be willing to negotiate better with you on the roof instead of you just coming out with that finished product. If it's not leaking, if it's not showing a lot of visual damage, but it's just a little older, maybe don't do the roof yet. Wait, because if you do the roof, do you think they're not going to have a list of things that they're still hoping for in the inspection report? No, they still are. But if you do the roof at the time right before closing, now you're closer. Your money out of pocket compared to the money coming back is really, you've tightened in that time frame quite a bit. So it's not a big transaction, and you can negotiate where that other list gets silenced. No, I'm not going to do all this, but I will do the roof. And if you were planning on it, just put that in the budget, but then just maybe wait and see if you get away with it. I've had so many people come back to me and say, Elijah, I'm so glad you did that, because they didn't even talk about the roof. Turns out he's got a cousin who's a roofer, and they were just going to do it at a discount, and he didn't think it was a big deal. And so he gave me full price offer. That happens more times than you may know. And just bear in mind, there are things buyers hate, but they don't always come back to be a deal killer. Just recognize what a deal killer is versus something that may be a negotiation.
Well, here's something that most people do not realize right now about insurance companies. and you could probably back me up on this because I'm sure you're hearing this in the industry. Insurance companies are now requiring that if the roof, depending on the carrier, is more than 10 or 15 years old, that it be replaced before they put a policy in place. And we're talking about 30-year roofs here. And people are like, what do you mean I got to replace it? It's only 15 years old. There's still good wear and tear on it. Well, I'm telling people now, look, hey, make sure curb appeal, and there's
if you do the roof, yes, if you do the roof or fence or driveway, sell the crap out of it. Sell it to everybody. Make sure that you're doing that. If the insurance company does that to the person, it isn't, by the way, always on the front end that they require it at closing. Sometimes they just go out and do an inspection after, and they say, hey, wait, we can't. Now that may not be your problem. Now I'm not trying to tell you to cause more problems, but again, you're negotiating right before closing, and roofs can be done right before closing.
Yes.
In fact, we, for instance, we're willing to do an invoicing if there's already a contract, if it's already at an option. We're willing to do like an invoice at closing, so you don't even come out of pocket with it. I'm not trying to go against the proper practice of having a roof ready for insurance purposes. I think what I'm saying is, in the order of business, and you're going to be negotiating anyway, a lot of times you can stop other negotiations that they're wanting to do. Hey, let's say, for instance, the rafters they're bigger than the purlin struts that are coming down, and the new rule on code is that any rafter has to be the same size as any of the purlins or the purlin struts. Okay, in that case, do you want to reframe the whole attic? No, but someone might consider that as something they want to negotiate, right? Because it was grandfathered, but they may not, because it came up on the inspection report, they may want to talk about it. But if you've got something like a roof that you're willing to do, but now you're negotiating with it, I'd say, I'm not going to reframe the attic, but I'll give you a new roof, or we'll split halvesies on the roof. That idea is valuable because it was never a deal killer in the beginning. It's just a matter of negotiation at that point. So I'm not disagreeing with you in that sense. I think if you do the roof, sell it well. And if it's a higher price home, maybe you have to do it. Talk to your realtor, look at the comps. But overall, I just want to keep the mentality around, if you over rehab on accident, you're still exposing yourself to a list of potential things that are going to come up on an inspection report. And you don't really have as much negotiation at some point. So maybe leave a few of those things that can be negotiated, like even an AC system that's a few years old is able to be done at negotiation as well.
Yeah. I often call clients that are overrun or their time with jet lending and ask them, okay, hey, what's going on? I had perfect example. I had a client in Beaumont noticed that they weren't moving, the property wasn't moving, and I called him. I said, hey, what's going on? We haven't seen a draw from you. What is going on? And at the end of the day, they're like, well, Rob, I know I should have called you probably about 4 months ago. No, they have not done a draw since November. November. When I looked at the last draw, they were about 10,000 from finishing. Now, it's a unique circumstance where we did a very low loan to value. They paid cash for the house. They just needed a certain amount to do the project. Now, we're at a really low loan to value. And all they needed to do was pick up the phone and call me and say, hey, we ran out of money. We need a little help here. Well, we modified the note and got them back on track. But when you're dealing with somebody like Cost Plus, you don't have to worry about that stuff. And a no-draw loan, you don't have to worry about, and communication with a lot of these clients is key. You got to let the lender, that's not just the guy that's loaning you money, is an expert in rehab and an expert in doing rehab projects. Oftentimes they forget, well, jet lending is just a lender. No, we have experience, and I can reach out to Elijah, I can reach out to Eddie, I can reach out to a whole, I hate to use the word plethora of people to get information so that we can keep the project moving. I mean, it astounds me how many people just sit on their hands and close up, rather than having a constructive conversation, even though it may be a difficult conversation to have with your lender. It's embarrassing. I get it. Hey, we ran out of money. But
well, if you're doing it on your own, you probably want a solution before you go ask for help, which is funny, right? Because a little bit of arrogance, a little bit of effectiveness in your brain, right? Especially us as guys. I mean, I think we want to see if we could solve it and then come with a solution instead of just coming with a problem, right? There's nothing technically wrong with that. But when you're working with a team, like you're saying, it's like we're on your team.
Yeah.
Bring your problems in to the team, right? Let's talk about them together. And like with us, and Brand has established this, so I'm happy to be part of the sales team, and we've got a really great project manager. If something comes up and we see it, we're able to talk about it. We're able to talk through what are the solutions with the client instead of it being on their own. Now, if they were the manager of their job, they would have to discover it on their own, right? Or try to figure it out on their own. And a lot of the workers, they're on pause in their mind until it gets figured out. They don't want to, the workers, a lot of the contractors, they don't want to be the one solving everybody's problems. They just want to be told what to do. So if you are working with a construction company like us, for instance, that's able to help negotiate and work with and figure out and solve those problems on your behalf, or at least tell you the solutions that are available to you, and then you get to pick the one you want, that brings so much extra value where you don't get stuck like you just said. I love that. So yeah, Jet Lending can help you get unstuck if you're just willing to admit, hey, I need some help. Working with a turnkey contractor that has experience, they're able to help you get unstuck because they're able to help solve those problems. I've got a project right now that is ungrounded, and the system is set up and working with solar panels. And originally we weren't wanting to mess with the electric box. So yeah, there's a few solutions available where we don't have to mess with the electric box to help a few of the rooms that are ungrounded. But those kinds of conversations could really stop you from moving forward if you don't know what to do, if you don't know where to go. And so you're right. It's good to work with someone who can say, hey, not only do you have 2 options, you've got 6 options here. Let's see which one works best for your house. See which one works best for the comps. See which one works best for your budget. That's what we want to do every time, as much as possible.
Yeah. And effective communication. I mean, honestly, most people don't realize how effective communication with your team, or reaching out for help, or calling an expert. Because I mean, at the end of the day, you may be being told one thing by somebody that's in your circle that may be absolutely false. You know, like, hey, for instance, oh, you don't need the roof. You know, it looks. There was a circumstance yesterday where somebody said, called in. Now, originally they were going to put a roof on it, and then they changed their mind, and you know, they're adamant that they don't want to put a roof on. I looked at the roof, and not to stay on roofs, but the first thing anybody drives up to a property, the first thing they look at is the roof. I mean, at least I know most men do, to see if it's any wear and tear, you know, because that's where all your damage is going to come from if you got a bad roof. You know, water leaks, you know, drywall repair. The list goes on and on. Well, anyways, he looked at it, and I said, well, the roof looks good from the photos that I see. I looked at the seller's disclosures, which is, you know, very important to get in circumstances like this, because even as an investment property, you want to know the condition of the property. If you've got a roof that was put on in the last 5 years, why put that in your budget? You know, why do that? And it's paying attention to those kind of details, to where you don't put it on your repair budget, then you have proof that, you know, the roof is good. And he's like, well, the roof is only 5 years old. I said, well, you put it in your budget. I've got to have, because it's been listed by the underwriter. It's been listed by, you know, everybody's taking a look. Oh, well, now we need documentation to make sure that this roof is in good condition, because there was a reason you put it on your repair budget. And now you got to change your mind, which we're willing to do. But at the end of the day, Cost Plus could come in and say, man, you don't need a roof. That roof is good. You know, it looks fine to me. And having the experience of a contract.
Yeah, so like having a roofer go out and give that whatever you mentioned with documentation, like based on, well, you could do it based on sometimes just the appearance. Yes, you could do it based on if there was any leaks showing on the inside. You could do it based on if there's any separation or missing shingles. You could do it based on how, if it's a newish ridge vent, that a lot of times can help you. You could do a flex test on some area of the shingles, and if they're super brittle, that's obviously aged. But if it's flexible still, that's obviously within 5 years or less. So there's ways to kind of tell, even as a novice, when you're going up, if the roof, if it's good or bad in that sense. Sometimes it could just be washed. There are a ton of trees over roofs, and if it just needs a little roof washing, that's a lot less expensive than doing a new roof. And sometimes when we service, we can do a roof wash and we could add a new ridge vent and some sealing around, and that's not as much as a brand new roof if it's only 5 to 10 years old. And that passes a home inspection a lot better than just leaving it as is. So yeah, I'm with you. I mean, there's ways to kind of navigate this conversation. Roof is a big one because roof is a big ticket item, and it's not getting cheaper; it's getting more expensive. So it's something to consider every time that you're doing a project. And it may be one of those areas that is a whoops in your budget. It's like oh, I didn't think about the roof, and then it comes up and it can mess with your profit. And that's why I bring it up, because if your mentality is if there's no leaks the roof's fine, that's probably not the best mentality.
Oh, not at all.
But if your mentality is I never know what the roof is, so I always add it in my budget, well, you may be missing out on winning on some of your offers that you're putting in on some of these homes. So a good rule to look at is threefold, and I'll just give this as another added value probably to this meeting. But number one, you want to look to see if there's any visual damage. Is there missing shingles? Is there fiberglass showing? That's that snowy white stuff that you look at when the sun's shining on the roof. Are there any separated shingles? Meaning is an inconsistency across or kind of bent ridges on? Is the ridge vent itself look older, like an older style, where there's whirlybirds only and not a newer style ridge vent at the top for the ventilation? Those are signs that the roof may be older just visually. Looking on the inside, is there signs that there might have been water penetration where there's no AC, plumbing, or water heater above the water, or above the moisture, where the brown spots are on the ceiling when you're buying it? That's another tell that there might be something. So just visual inspection first. Second, look at the flex test. Get a step stool. If you're spry enough, climb up on side of a fence. Don't break the roof, but just like one area, see if it's flexible. If it's real brittle, you know that it's aged more, or if it's flexible, then it's less, right? Because there's the three layers to a roof. You've got the asphalt layer, you got the mix of asphalt and fiberglass, and then you got the rock layer, which is that UV protection, and the color. That's what makes the roof the color where it is. Sometimes those rocks get done, but doesn't mean the roof's completely gone. Maybe something hit it. Maybe it was like hail damage or something. Anyway, the third thing you do, outside of getting an inspection done, the third thing you do is you look at your neighbor's roofs. Don't look at your roof anymore. Look at the neighbor's roofs. If 40, 50, 60% of the neighbors look way better than your roof, that's another tell, because most of these neighborhoods tend to change out together, right? Based on age, based on storms. So you want to look around now at your neighbors, and if you're the worst looking roof, even if you're feeling like everything was fine, you may put it into question. You may put it in the budget. But if your roof looks pretty par for the course on that neighborhood or on your block, maybe you're okay. Okay, so this is just from a novice perspective. 3 things: visual, flex, and check your neighbors. And I think people can bat better on some of their offers that they put in without overdoing it at the wrong time, without underdoing it because they just completely forgot. I didn't see any leaks, so I didn't know. Yeah, maybe you don't know, but there's some things you can know, and so go for it that way. Yeah.
Well, at the end of the day, that's the whole reason why I wanted to do this with you, is so that we can provide some tips to clients that are like, that I never thought about that. Number 2 is to get our no draw loan more visualization. That way that we can sell it more, and people will be intrigued. Oh, whoa, a no draw loan. That sounds great. How do I sign up for that? I'd be remiss to ask. We just completed one. How did that one go?
It was good. I mean, it had there were a couple hiccups. We had the hurricane in the middle of that. There were some things that go on anytime a hurricane happens. You have a few delays and things, and then there was also the um, it was a house that had water remediation in the beginning, and
Yes.
I don't know if you end up working with any kind of mold remediation, but that doesn't always go exactly as planned, and so there was more that needed to be done. But we were able to actually make some considerations along the way to help with the budget. That's what we're trying to do, right? We're trying to make it a win-win for everybody, and I think it went pretty well. So overall, we'll see. You and I can have a conversation with them and debrief, and go through it. I think the main thing is that when you look at each project, or you look at any kind of investment that you're looking at getting into or partnering with, it's good to know two things. One, it's good to know that you got a good solid plan starting at it. But number two, it's good to know that you have a good team when things, and they will, shift, pivot, maybe go wrong a little, and just how you're going to handle it so that you're not alone. So you don't have those, what you just mentioned, which is getting stuck, getting stuck for months, it sounds like, with that one customer where you're just looking for a solution on your own to bring to the table instead of knowing you got a team to rely on.
Yes, absolutely. I mean, and anytime I get in front of a crowd, anytime, I always give, you got to have 5 people in your corner. 5, in my opinion, you got to have 5 team members in your corner. One is a mentor or somebody you can reach out to for advice. Number 2, title company. Number 3, good insurance agent. That way they know how to write your policies, and somebody you trust that's not going to mess you over. Number 4, a lender. And 5, which is probably the most important, is a competent, trustworthy contractor that is not going to mess your project up. And
I love that.
Those are the 5 things that I always say you got to have. A title company is important because there's a lot of title companies that say they're investor friendly but have no clue how to get creative and think outside the box. And
having a sure clear that you're going to be able to close on something is so important. Anytime I've done investments, that's absolutely right.
And most people, I mean, there's a lot of title companies out there that don't even know how to do a simple transactional funding, which, I mean, is, you know, I'm not trying to insult anybody. It's probably one of the easiest things you can do in real estate. You know, it's an A to B and then a B to C. It's just 2 closings. But for some reason, they're not comfortable doing it.
I hope everybody heard you right there, Rob. And I'm going to have you say him again, because I know you say it on stages everywhere, but just in case people are just finding you, what he just said, guys, is that you can have your team ready before you even have a deal.
Yes.
So that when a deal comes across your table, you don't have to think, what do I do with this? You know that you can activate right away. Yes. You know that you've got a team waiting for you. So this is an action you can take even before you have a deal. You can get connected with your core. Same again, man, because I don't think that everybody necessarily knows why they stop doing things. Like there are people who want to invest and then they get in their own way a little bit. Most of the analyzers out there, most of those that are analytical people, they've got the capital because they were the savers. They were the ones who knew. They were the conservative ones. They got cash, but they don't know how to get out of their own way sometimes to make a decision. And then you've got others who make decisions, but they don't necessarily know how to temper their quick type A decision making, like get out there and just run risk. They don't know how to temper that with a good team, right? So then they maybe made a few decisions that ended up taking them out, and then they got depressed and they stopped doing it. So somewhere in between the two, with a team, you take the analysts and you bring them up into accountability to go ahead and move. You take those that are just shooting from the hip and you bring them down a little bit to reality and say, hey, we're in this with you. Let's go ahead and make sure that you do well. And now you can be successful. Everyone can be successful when you've got a good core group. I love what you just said.
So the 5 people that I always say you need to have on your team is a mentor, number 1, a coach, somebody that you can reach out to and ask questions. I mean, there's people that I dare say they consider me a mentor, but I'm more of a information. I have a lot of information. so I freely give it because at the end of the day, it is invaluable, you know, and I like to help people. You know, nobody pays me for that, and I don't expect them to. Number two, so a mentor. Number two, a title company. A title company you can trust that's not going to fee you to death and that is investor friendly. Investor friendly. Number three is a good insurance agent. Somebody that knows how to write policy
Super
and not fee you to death. That knows
the right policy. The right policy.
The right policy. That way, if something happens, you can rest assured that, hey, a hurricane's coming, but I know I got that house covered. Yeah. Even during a builder's risk policy, you know, I know that I trust that this person's right.
Really important.
The correct policy. Number three and number four is a good lender that knows how to get values, that's had a lot of experience. Mm-hmm. I'll tell you a war story after this. And then number five is a contractor, because the contractor is the most important person once it's closed, because it's you and him or you and them going head to head to get that thing closed and get it on the market, get it rehabbed and up to standard so that you can get it on the market and make your sell. Because guaranteed, there's a lot of people in this industry that just don't run their business the right way and go into cost overruns and go into all this other stuff because they just aren't handling their business. You use cost plus, you don't have to worry about that stuff. You're going to go in and get it done. But
before you tell your horror story, I'm going to just chime in with what you're saying. Yeah, absolutely. And everyone needs to know something about themselves. When you're an investor, you're going to be two different people on every deal that you need to remodel or have repairs done on. The first person you have a budget hat. How much it's going to cost, how much I'm going to make. And whether you want to admit it or not, you usually take that money to the bank a little prematurely mentally. It's like that money's already in your pocket. And so from that point on, you become, after that though, a second person. And that second person is, oh my God, I have to actually sell this thing. I actually have to, and I don't want to hold on to it. And now, did I make all the right decisions? Is all this done right? Do I need to go back? Do I need to change that? Do I need to upgrade that? Do I need to go ahead and do that thing that didn't fit in the budget before? And everybody's two different people that I've ever worked with, including myself, by the way, whenever I do my own investments. It's budget minded first, and then afterward it's, I need to sell it. Did I do the right thing to get it sold? And along the way, while you're becoming the schizophrenic mess, having a team is so important to help calm you down, to help reorder you, to help reorganize you, to get you back on track. It's like, yeah, no, we can do that. Do we need to do that? Let's go back to why we didn't do it. And just remind you, right? Those kinds of things along the way. Please tell your horror story.
No. I mean, it's a horror story. And look, I know there's a lot of great lenders out there, and we have a good relationship with a lot of them in Houston. Friendly competition is always good. There's enough business for everybody. But I will tell you this about a certain lender that a client called me on, and this is why being with the right lender and them giving you the right ARV is super, super duper important. Client went to ABC Lending. They did the rehab, blah, 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 blah. You know, all that's negated. Mm-hmm. Well, they loaned off of superficial value. Mm-hmm. And it was a buy and hold Airbnb. And when they went to go refinance the property, they literally had to bring $100,000 to closing. Yeah, I know your eyes are like, what? Because the lender misled them and didn't give them actual values on the property or do the due diligence that, you know, some of our competitors and us do up front to say, hey, look, this is where the values are. And it's imperative for you to pay attention to what Eddie and I always say this. If you want to know you got a deal, send it to a hard money lender. If they'll lend on it, then it's going to be a good deal. If they
Yes.
won't, or if they give you their values, then you should pay attention to that, because they've only been in business for a certain period of time, because they know values and that they haven't put themselves in harm's way. And at the end of the day, if you don't pay attention to that and you're just like willy-nilly in it, that's why. And, you know, most people are in this day and age in an investment property don't believe you need an appraisal on a property, which I am literally, I would never close on a piece of real estate, A, without going to a title company to do so, or B, not having an appraisal to verify values. Mm-hmm. Even though sometimes an appraiser has inflated values or deflated values, it's an opinion of value. I want to know if he's even in the ballpark, you know? Mm-hmm. And that's extremely important, especially during right now in the lending environment or the real estate environment that we're in. It's not exactly user-friendly right now, is what I'd say. It can be scary. It can be scary.
To the point, what you just said, Airbnbs in general are a little bit of a unique thing, because there's no DSCR that you can go with because a rental agreement was not signed, and there's no willing buyer yet. So an appraiser would, in general, have a little bit harder time putting top dollar in on an Airbnb property anyway, because there wouldn't actually be any buyer saying I want to pay this price, or any rental saying I was able to afford this amount per rent per month. So I think that that's always probably a good thing to be able to relate to someone with experience like you in that anyway, because sometimes you get higher appraisals simply because somebody is willing to buy it at a price, and the appraiser at that point feels the need to make a good case if it's under, versus making a good case why it's over in their mind, when no one's actually there putting an offer in on the property. Yeah. But another thing too, I want to add to your list, and that is appraisals, yes, but also inspections. I think investors, and I always do on my properties, I like home inspections beforehand. I'm going to tell you the argument against it, and I'm not saying there's not validity here, but I just want to say it. I don't think it's worth it. The argument against it is, don't I have to disclose that I did an inspection, and don't I have to show it? And I say yes. But do you think that person who is going to be picky potentially is going to just trust your inspection? They're going to get their own. No matter what, they're going to get their own anyway, right? And what would you rather? Would you rather have all the little nitpicky things on your mind while you're going through the project that you know you probably want to fix, or at least know ahead of time what you're going to have to negotiate? Or would you rather wait till after the project's done on the little things that are new, that just are nitpicky? They're little things that could have been done potentially along the way. It's a misnomer to think that a salesperson, and I work for Brandt as a salesperson, I'm not a home inspector. I can't spend 3 hours looking at all the functions of the home and spend 2 hours walking the house to get the bid, the detailed budget. Can't do both. Now, I see a lot of stuff while I'm there, and I have a lot of experience to weigh in on, but it's not the exact same thing as a full home inspection. And I think it's, if you're thinking in terms of, and just go back quick full circle, if you're thinking in terms of what you can keep, is where you start every project, and then you look at what you're going to do based on comps. If you think about what you can keep, it's good to have an inspection where you know what's working, what's functioning, what's able to be kept, and that helps you also in the full scheme of things. And there's one more benefit to it that a lot of people miss. That is, if you have a lot of buyers who are looking to, like you've got a backup offer, maybe you got a lot of attention, and if you do a good job on remodeling, that is very likely you're going to have. Now you can tell people, earnest money, I'm not going to give you as many days on option because I can show you an inspection report and all the things I did to fix it already. So I'm going to need you to have your option period less than 15 days, less than 10 days, because I can show you what the inspection report says. You're going to have to put it in a little harder than that for me to consider your offer. That is a huge value add, because you are already able to show them something and all the things you did. And
yep.
And that's something I think some people miss. It is a couple $100, $300, whatever, $400, but it is. I always do it, even though I have experience, because I am a different person when I'm an investor. Guys, you get infatuated with the deal and you miss the little things. It is so common. So don't always trust yourself to find the little details. Go ahead and get an inspection done along with the appraisal.
Yeah. I'm going to say, add on to that. There's a lot of people that'll watch this either now or later, and they'll be like, well, it's all great information, and they'll put it into their toolkit, and they'll say, okay, the one thing that most people that are in a room, anytime they're at an investment class or anything that we put on, the one thing that they lack doing is taking action. Taking action in everything you do. You can have, it's like, I use the analogy. I love football, so I use the analogy. College, high school, NFL, it doesn't matter. Every week they practice. They go sit and watch film, and they listen to their coaches, and they listen to all that stuff. But at the end of the week, what do? They go out and take action. They go out and put what they've learned to work and see if they can, succeed. You can get all the knowledge in the world, but if you don't take action, you're never going to know if you're, able to do it.
My 90-second advice. Two things. One, the biggest job of an investor that can't be done by anybody else is you getting comfortable on pulling the trigger on the deal. You need to learn how to analyze and trust a team to be able to know that a deal is a deal and be able to pull the trigger quickly, because in this market, the good deals go fast. So number one. And then number two, the taking action part, I believe analyzing 100 deals is not as important as putting in 100 offers. So when you think about it, most people, when I talk to them, I say, how's your business doing? And they're like, yeah, I'm analyzing 20 deals a week. I said, how many offers do you put in? None. None of the numbers worked. I said, well, you're doing it wrong. If the numbers don't work, put an offer in on the numbers that work. And then if all they have to say is yes or no. I talked to a guy the other day, and he said, yeah, they're asking me yes or no on the deal. I said, you did it wrong. You should be putting in an offer where they have to say yes or no.
Yes.
That's the way to think about this.
Make them take action because you're taking
action. Yes, exactly.
They may be, you don't know what's going on the other side. And me and my wife shared this the other day. Like, there's so many people that, either prejudge or pre-talk about what's going on in somebody else's life, but we really don't know. So in this analogy, as far as, real estate, they may not have any offers, and they're just like, you know what? You got to pay attention to how long it's been listed or how long it's been marketed. And if you throw an offer out there, they may have seller's fatigue and say, screw it, take it.
Exactly.
And building relationships with real estate agents or wholesalers is probably one of the quickest way you're going to get a yes.
Yes, exactly. And if you don't treat them badly, if they say no, they're going to keep coming back because they know you can handle a deal. They know that you can quickly analyze it. They know you can quickly make a decision on it, and ask them, well, if it's at this price, it makes sense to me. Can you do that? And then they know if they say no, you're willing to keep coming back. That's a value add in all of the networks. But if you don't know how to make decisions quickly, they're just going to treat you like every other newbie who doesn't know what they're doing, and they're not going to keep giving you deals across your desk. Or it's just going to be in an email only, not with the direct interaction that you're hoping for, because that belly button to belly button reality is where the negotiations happen, not through email. So I agree with you. This is an important piece of taking action. Offers. And that's really where you solve for the right X, because the repair budget's what it is. The ARV is what it is. It's the price that you're paying for the house is the only movable object in that scenario. Yeah. You have to know how to analyze that, so you put in the offer that works for you, and they say yes or no, not the other way around.
Yeah, and at the end of the day, if they say no, we'll say, well, look, you have to explain it, and not over an email or a text. You have to sit down with them and say, look, in order for you to sell this property, you've got to do A, B, C, and D. I'm willing to give you a cash offer or a hard money offer, closing in 7 to 10 business days. Yeah. I'll do all this work, and you put the money in your pocket and go on down the road and go buy whatever you need.
Yeah, you could even leave the junk that you don't want. Leave it in the house. No worries.
Don't worry. I'll take care of it all.
I'll take care of it. I'll even help you move. Maybe I can throw an extra $1,000 in to help you move.
Yeah. You got to get creative. You got to think outside the box.
Yep. I love it. This has been great, Rob. Thank you.
Elijah, thank you so much. Let's do this again next month. That way, we can get more people engaged with us and Cost Plus. And guys, no draw loan. Watch this whole video if you haven't. And if you need more information, there's a ticker at the bottom. Call Elijah, call myself. The no draw loan is only with Jet Lending, and no, you cannot bring your contractor to get the no draw loan. It's only with Cost Plus. But that is all the time we have for today. Elijah, I appreciate you. Thank you so much.
You as well, man. Thank you so much.
And don't be a camouflage Christian.
Good word.
All right, buddy. I'll talk to you later.
Okay, see ya.
All right, bye.